Welcome everyone, and we'll be doing the having our live analysis now. Now breaking down everything that happened last week and what we are looking to the market for this week. So, firstly, if you should go to 4 hours time frame, you should go to 4 hours time frame. You're going to see a standard double bottom that has been formed. I use the term standard because the market never came to break it structurally. They had equal bottom, that is, they bounced off the same area or zone in the market, and that's due to the fact that market has been in a bullish form for a couple of weeks. But before then, we had market dumping from March. The gold market has been dumping from March due to geographical situations all around, the war, fuel market, finance, forex, all has been influencing the market at large. So let's take out the fundamental part of it out. Let's talk about the technical approach to the market. So for this chart, I had the projection that market will come retest this neckline that we can see obvious here, which is why I highlighted this area out, in which many traders, even I personally, could have fallen for this because the market where price already came to the area, retested it, gave us a possible bounce up of head and shoulder pattern. But then market was not ready. It wasn't ready to move. Let's talk about the big banks. Let's talk about the hedge funds. Those that really moved the market. They were not ready to move. So situations like this, oftentimes they need a solid they need a solid conviction for their buyers to change, because as you can see at this point, let's say market is reacting off some other block over this area. If you go to like a day message strong candle here, so at this point market decided to push the upside, but that's as a result of this area haven't been established, this other block haven't been established, so it was respected by price. Yeah, it was expected by price to what, to put to the downside, and immediately that happened, so it was expected by price to put to the downside, and all it looked to do was what, it cleared off this liquidity, tap into an established zone, and what, started selling to the downside. If you can really point out some obvious movement that market pulled off to give us certainty that it was going to the downside, look at something like this. Something like this, we started having lower lows, lower highs, start having lower lows, lower highs. And that went on and on and on. While all of this is being forming, don't forget that we have had an established liquidity to this side. forget we had an established liquidity to the side. All of that liquidity were taking all up to this area, which was established as our what as our neckline and what key level. It's a key level because it has both served as a support, but because it has both served as a support and a resistance zone. Just like as this area here, you can literally see markets having respected the zone to push to the upside, and at the same time, at this point, you can see how this area influences the market to the downside. That goes on and on and on. So, as I was saying, that the indication that market was coming to the upside was established due to historical data that has been established for a while, and then this. We had the established neckline that I was looking for. That was my own projection that market will be giving us a bullish run for a while. And there's something I always talk about market approach, which is identifying the trend before establishing a stand or a position. So you can literally see that when it got to this area as at 28th of April, that's 2 weeks ago. Yeah, 2 weeks ago thereabout. Many traders would have been expecting market to put to the upside like in a quite fast fashion. Unfortunately for everybody, every one of us, basically retail traders, because we are we are we are we are we are created in a way whereby we are result based. Our orientation is based on getting responses of our actions. We expect, okay, we establish a zone, then we expecting market to give us response if it's going to go and or not. But what it did here for a while was consolidation, which can really test the impatience of any man, which is often the downfall or the problem of most traders. I personally still struggle with it. There's no need to sugarcoat anything because oftentimes, sometimes due to FOMO, you would have seen situation like this that has been established as what a good entry position that looks to enter from here, and in which I established this quite this area before it started coming up. Pardon me because I ran a class earlier, and our our webinar was to have started earlier by 7. Due to my going and coming, I got exhausted with a lot, and I have to make it up to you guys because I know how many people were looking up to this class. So I decided to come all over again to hold it. Now, continuing what we are saying, that's how we're able to establish this area as a good entry for what a long position, which I did. I didn't even stay this long because all I was looking for was a 2-to-1 ratio, and just as market did over here, just as market did over here, I was expecting likewise sort of correction from this area, which never happened. But what is better safe than sorry. So then we are looking for market to rally all over to this place, which has been established due to this that I drew out, and market will be open in the next 1 hour. Yeah, next 1 hour or less than an hour. That's why I'm here. So the first movement we can expect from market will be something like this. The reason I say something like this is because forex market is historical based. When we talk about the technical approach, there are some established levels, there are established zones, there are established areas in the market that markets or price we always tend to respect, even if not for long, but you would see some level of pullback, some level of correctness, some level of consolidation around those areas. So these are areas that we should, or oftentimes we should, put out as our POIs. So now, this established rectangle line you're looking at here is an established POI of mine that I would generally or naturally look for market entry. I'll look to enter a good entry from here, regardless of how market approach it. All I have to do is be patient. And oftentimes we would look to enter around here just as the place I drew it. And these are things that hedge funds know, big banks know. So they know that we'll most likely set our SL to this downside, to this down area. So they always look to take it out. Unless you're one that play the longer game, unless you're a swing trader that once you've already calculated your risks to reward, and you've established the fact that market is going to go long around this area, be it 4 hours, be it a day, as long as it's not hitting an established SL. So in a situation like this, I would have highlighted another area where market would most likely react off. So now, since we have this as established, or let's say even before we have this area, I would have highlighted this neckline as the worst case scenario, or this. That is, if market should break this, I'm no longer interested. Why? Because if you have to go to a lower time frame, this is an established neckline. This is an established neckline. Even though it has been mitigated, it can still be very, very sensitive in a higher time frame because it can just take it as a liquidity. That is a reason to come to the area. So now, still riding on the bigger structure that has been established from this area here, we had our double bottom, and we were having the projection that it will go all the way to, let's say, 5,000. Yeah, all the way to 5,000. So 5,000 is a psychological level in the sense of is an area that is obvious, that is apparent to not just the retail trader but also the big banks, that is quite constitutional for anyone to take as a position or a point of interest. So areas like this are very, very delicate. If you're not going to be consistent in the market, like if you're not going to be present on the charts, you tend to like put out your pending orders in situations like this. So in case market rallied up to the area, you wouldn't be in a situation of loss. So my projection so far, as you can see on this chart, is my projection as you can see on this chart is that we're looking for market to rally up to this area. But as you can see on 1 hour time frame, as you can see on 1 hour time frame, I need this, okay. As you can see on 1 hour time frame, when market was coming to the downside, you can see how it pulled over, then it still rallied up. But all in all, it was giving us a lower high, lower low, lower high, lower low. So likewise, this would have pattern that would give us situation of higher highs, higher lows. Why? Because we are now in a bullish run, at least all up to this area. And if you have to look at it, you are talking about how many percent of pips. So let's say from this area to this area, which is very likely the market will give us something like this, something like this. Then why do I highlighted it? Because it's a key level. Because it's a neckline. Now it won't just respect a line, it respects a zone. Market will respect a zone, not a line. That's why we often use rectangle as this to establish the range. So let's take from here to this place, and this will be our midline. That is, we can have a projection that market would do something like this. It's never a straight line. It is never a straight line. But then we're just having a projection. We're just projecting. So we'll do something like this, then to this. Now to do something. So in a situation like this, So that's if markets. So in this place now, on this POI, on this red line, we have, let's say when we talk about probability, now in the POI in an established area that we regard as point of interest, we would have higher probability of market respecting or price respecting that zone, which make us have a probability ratio of 80 a probability ratio or a probability percentage of 60 to 40, or let's say maybe 70 to 30. So anything that happen above below this, like once it breaks through this line, this established line like this, let's say it goes and break through this and market or price close below this, then we might be expecting a break and retest. Break and retest in what sense? That once an established POI has been broken and also structure of an established structure has been broken, then we are either looking for a change of character, or our market is looking to give us a change in trend. In situations like this, chart pattern tend to be what we look out for. Chart pattern in what sense? Either we'll be looking out for a corrective pattern or a continuous pattern. Corrective pattern in the sense of a situation like this now, just as I was drawing out, I expected a pullback to this downside, then to go to the upside. That's what a continuous, a corrective continuous pattern. That is, market is looking to come to this area to correct this pullback, balance the neckline, and what continue its bullish trend. While the other one is, the other chart pattern is what it changes the path. It becomes obvious that the trend has changed. In this kind of pattern, these are trend changing sort of pattern that we look out for in the market. And for us to identify those sort of pattern, they have to have breaking and establish structure, which is what I'm trying to explain to you here. That is, if you are to have price or candle close below this, that's a structural change. And they will be looking for market or price not to break above this, at least for the next couple of major movement that will happen within that day, within couple of minutes or hour. But before we can have a strong established movement or point of interest, market needs to have giving us a clear interpretation of what he's looking to do. That is, if he's giving us a break and retest, that is a confirmation on its own. And if it is looking to continue, then we need a kind of corrective or a kind of corrective movement or pattern that indicates such. If you are to beat that to candle, if you are to beat that to candle, we'll be talking about doji candles, inverted hammers, or shooting stars. These are kind of candles that tend to suggest change in momentum or change in direction at any point in the market. I know I might be using some terminology that are quite technical. Is new. Get familiar with it, even if you don't understand it in the moment. These are things that over time would make more sense to you. So in order to not make this overcomplicated, all I'm trying to say is, if market or price come all the way to this place and close above and close below, we'll be looking for a break and retest. So that is why by Tuesday and Wednesday, a major fundamental will be coming on USD on Wednesday around 7 p.m. I guess. So I would put out notification on my Telegram, on our website, on our socials, to let people know, to let interested traders be aware about it, so we can all relate and compare our analysis or approach in the market. So this is a projection that, so to make it all easier, my projection for the market remain bullish, at least for the next couple of days. Yeah. Now, the fact that I stated that remain bullish doesn't mean that we won't have some corrective movement in the market. This is only a newbie that wouldn't understand that. We'll definitely have some corrective movements in the market. But what I'm standing for, or what I'm much more projecting, would be that at the long run, we're going to be having much more higher highs compared to lower lows. We'll be having more higher highs, higher lows, higher high, higher low compared to lower lows, lower highs. Well, that is, we're having much more of bullish run, bullish trend, um bullish momentum compared to bearish trend, bearish momentum. And in situations like this, pay attention to liquidity. Pay attention to liquidity. Try to identify the liquidity in the market, because if you can't identify the liquidity in the market, you'll be the liquidity in the market. Now look at this. That's why it was quite certain the market will come all the way to this place to at least clear the liquidity. And after then, you can see immediately it touched this. If I had to go to 5 minutes, I'll give you a whole lot of confusion. I won't do that. So in a situation like this now, very, very, very exact pull work, but not for long. Yeah, not for long. These are the sort of corrective movement I was talking about. They tend to happen to just correct the movement of the market, to give opportunity to clear out liquidity and reset or balance the market. We'll be having market will be opening by what's it called? Market will be opening by in the next 1 hour. Can go to my YouTube, can go to my Telegram channel to have a clearer view of what is happening. To keep up with our webinars, go to our website, get go to our website, get the free starter pack, get familiarized with the website. There will be challenges that will be coming up, there will be promotional posts, there will be market analysis and breakdown, there will be signals, there will be profem, there will be mentorship programs for all. Just make sure you're intentional about whatever thing you're doing when it comes to Forex. I can't take out all of the problem, but at least I can definitely solve some, or at least make a whole lot of things a whole lot more easier. Make a whole lot of things a lot more easier. We'll be using other platform to better get what's it called, traffic, to get that, to better get engagement. Also like testing the water, but it's quite big. Anyway, these are projection for gold, and I also have something on what's it called, on BTC. Where's the, I don't know which application I used. I don't know which broker I used. I mean, finance. So I had this projection for BTCS since February. Since February. And the earlier video I said I did quite explain all of this. Anyway, this was an this was an analysis I did February 11th thereabout. As you can see, this 11th of February. So the projection was, after I saw how this left this area, after I saw this rejection, I was quite certain market was not going to break this, and I was expecting a double bottom. Yeah, you get me right. A double bottom, which market wasn't looking to give. So it went on and on, consolidated through this price for a very long time. The movement was like that till maybe March, yeah, 15th of March, 15th to 30th of March. So you can see how the movement start pushed from here. It was maintaining 70 or 65K to 75K for a month, and all it did was, yeah, this was the change. It came balance this, clear this, clear this. I would have expected something like this. Yes, I could have. Even matter of I would have been expecting it to be here. Anyway, market like opportunities like this tend to be very, very, very rare. But the fact that it kept raging through this place, if I had followed the market long enough or followed this particular chart long enough, would have known that it would go that way. Now imagine this was the projection. I knew it was going to the upside and I was targeting 80, 80 to 90 thereabout. I think I highlighted this. Then this was my target. It's 7K. It's 7K. I think I did a record of my analysis then. So we are still few views behind. We still have some projection to this upside or something like this or something like this. Establish here. That is any pullback that happened here. I just hold on. Hold on. As long as it didn't break through this, as long as it does not break through this, use an edge to ride through the week. It might be frustrating, but it's an edge. Might be frustrating, or it's an edge. I and there's a new low. Minute, there's a new low. So you can see, as long as it doesn't break through this, can keep riding this to here to this place. So I'm talking about how many pips. I'm gifting. That's me gifting you. It's like it's 4 hours. Oh yeah, that's me gifting you at least 705, at least 700 pips. Honestly, this me gives you at least 700 pips. This me gives you at least 700 pips. Now let's even say, let's not be at the gray area. Let's talk about stock here. Like when market closes above this line, you can enter. That would be me giving you all 500 pips. That's 530 thereabout. Anyway, that's by the way. This is an edge for you to. I'll be forwarding this to my Telegram channel after this class. So as you can see on my YouTube channel, everything you need are right there. You can go to my you can go to my website www.bossfxacademy bossfxacademy.com, not academy. Academy is the name, academy is the title, academy is what it is. But when getting a domain, already had that secured. So we went with omitting the first A, just the first A. So on the website, you can get free downloadable resources relating to Forex basic and fundamental topics that are quite essential for beginners, and you can get to familiarize yourself with our blog post that goes from beginners guide to advices, boss effect strategies and edge. We have starter packs that are very, very, very fundamental for anything relating to forex. You don't need to go through the guessing game. You don't need to watch thousands of YouTube videos. There is a structured approach. There is a structured education towards understanding forex. That's exactly what BossFx is looking to do. This is an academy I wish existed. This is a platform I wish I had. This is a platform I knew and I know many people hope to have seen. Enough of the guessing game, enough of buying into the lies, enough of you trying to just rough it in. See, we are in a harsh world. We are in a place where opportunities are not so given. Trust me, no matter whatever thing you are doing, no matter the amount you are getting, as far as you are investing in your knowledge, as far as you are investing in your skills, this is what you can always leverage on, no matter where you find yourself as a person. Anyway, that will be the end for this class. I gave you for this webinar. I gave you two good analysis on BTC USD, and I also did on gold, which I would follow through the week. You can hold me to it. You can come to the group. You can come to the you can hold you can hold on to it. You can trust me on that, and you can give a follow up on our website. You can absolutely give a follow up on our website. So I used Forex.com here. Okay. So let's see. I give an initial analysis to USD. So I give an initial analysis on gold. So I'll just show you the projection I drew out. Yes, these are the projection I had on it. Quite similar. The only difference would be, so I could, if you are through, if you pay attention through this live, you can literally see is everything I said or mentioned that or highlighted in the initial trade that is happening here. So we are looking at something like this. That's even to this place. This is quite a conservative approach compared to what I showed you, but trust me, that's on 4 hours time frame. So they have the same potential, the same probability of what playing out. So these are our key points of interest. I'll be sharing it to our Telegram group, and you can be kind to subscribe to the channel. Let's grow our audience so we can reach greater audience and also help with our visibility. You can be helping a brother by just sharing this. Trust me, I don't need your money. Ask my students. Ask my students. They are right on the Telegram channel. I refuse classes a lot. I refuse classes a lot, all up till now. And the obvious reason is I would rather be on the chat looking for my stipends than doing this. Talking hasn't been easy in terms of passion for this, because I can go on and on and on. But then, yeah, we have it. That will be all for today. Thank you.